All right, guys. Hey, good afternoon. Here on day 3 of the 3-day trade camp. We're going to get started here in a couple minutes. Today, we'll be wrapping it up. We're going to be going over a few things that we did cover yesterday. Hopefully, you're taking all this in. It's going to help you on your trading, hopefully, as well. And then we will see how things work out for you. I really would love to hear your stories from this webinar. If you have some, if you tried some of these trades and it works out for you, that'd be great. Love to hear it. All right. So let's get started here. Let's talk about day 2 real quick. We did have a Q&A session at the beginning. We talked about placing a trade in an ideal condition. We didn't really talk about in non-ideal condition. So today is a bit of a non-ideal condition. However, we did have a dip this morning, which would have been an ideal time to put it on. However, my thought is that the market is going to continue going up and volatility is going to continue going down. So actually putting on a trade with the knowledge of thinking that the market will continue moving up and volatility going down is actually ideal. So we will be putting on that second trade just in a few minutes here. Any questions about the technical analysis, indicators that we use, anything about rolling a trade? I'll be simulating a trade that basically is breached and show you what we do in those kind of circumstances. So today, day 3, are there any questions that you guys had from any of the previous 2 sessions? Oh, how to draw fibs? Sure, I can definitely show you how to do fibs. We can do that for sure. News catalysts like CPI. Yep. We can talk about that too. So I'll put that out. We'll talk a little bit about that, how news events affect markets. Let's start with the news events. So this morning, the CPI came out, the Consumer Price Index, which is one of the 3 inflation indicators. And here's the deal. The day that the Fed minutes came out, which was last Wednesday, I believe, when those Fed minutes came out, that information that was shared from the minute were kind of a surprise because I don't think anybody really understood the amount of hawkishness that those minutes conveyed. So it was one of those things that it was not priced into the market. And those are the things that move markets. So today, the CPI was going to come out. So we know that inflation's high already, and it even moved higher than what was expected, right? I think we got a 0.5 increase on the CPI, and the expectation was a 0.4. However, the markets rallied. And the reason is because we already know that inflation is out there. It's already priced into the market for what's happening now. And it really wasn't a surprise. And so because there wasn't a really hot CPI, if there would have been a really hot CPI, the market probably would have gone down. But because it was pretty much as expected, the market actually rallied because it didn't want a really hot CPI going on. And after the congressional hearings that Powell was in, he basically conveyed that, hey, the economy is strong and it can handle rate hikes. And I agree. I completely agree with that. He actually calmed the markets down, and then the markets, really rallied off point. So that's kind of what happens. It's really the things that we don't know about that causes the markets to move one way or the other. And so you have to kind of take that in a grain of salt because there's a lot of things that we know that are not great, all this inflation, but that's all priced into the market. That kind of covers the news events. Now, when there's a Fed meeting and you don't know what's going to happen with interest rate, that's a really good time not to trade because anything can happen at that time. And so you want to wait for that to just blow over and then enter. Today was a perfect day because the market ramped up and then it just dropped, and it was a really good day to put on a trade, and it still is today, actually. Okay, and then we're going to talk about the second review of rolling trades. I just want to bring that home and make sure, and then we're going to talk about conclusions that you all have from these sessions, and I'm going to write that down so that they're put into the slide deck so you guys have that when we do talk about key takeaways that you guys have learned from this session. So let's go here. All right, let's start with putting on that second trade. I'm going to open the charts here. What we want to do is we're going to go to, we have that 7, so we can put on a 7DTE. And you can see here there's 2 dates really close together. That means usually there's an off day, and I think Monday is an off day. So I don't like an expiration on a Monday because it's the weekend. And the 18th, I believe, is a Tuesday. It's a Tuesday because Monday the market's not open. Let's put this trade on for the 19th of January. We're not putting on an iron condor. So I'm going to change this to deep and wide, 1 month, 2 strikes. So we're going to go now look for, and normally what you need to do is you need to change this to a single. right? So that you can see the delta. And you all remember what delta we're using, right? Yep, 10 to 12, perfect. Okay. Anyone want to try their hand at which one we're going to put on? Okay, somebody give me the strikes that you think that we'll be putting on. 45, 45, 85. Okay, remember we're doing 7-day. Now we're doing 7-day. So what do you have? 45, 45, 70, 80. That's close. That's really, really close. 70, 60. That's good too. Okay, but I see the short strike for this one is on, I have 19 January, 45, 85, 45, 75 is what I have. Let me move that down. 45, 75, 85, and that's right, 11.99 on the delta. And it's giving us, what's the premium on that? I've got the 45, 85, 45, 75. So I'm picking a 12 delta. Yeah, I'm not seeing the market, but I know it's moving up. I got a 75 premium. You filled a 75 already? All right, you're quick on the draw there, buddy. So I'm going to review it and send it in. I'm just putting on one. It's not filling at 80. It's actually, I need to bring it down to 75. I'm gonna bring it down to 75 premium, and it's not filling either. Okay, we'll give it a second here. Let's see if it filled. Nope, I think it's gonna go up here. So I'm gonna go ahead and put it in at 70 because it's not filling, and that's okay. So I'm putting it in, and boom. Filled. I'm not in simulation. I'm actually in a live trade. So it filled for 70 cents. And so what do you do when you get that filled? What's the first thing you do? You got it. Perfect. You put in a good to cancel order, opposite order at 10 cents. It doesn't mean that you're going to close it at 10 cents. What it does mean is that you're going to have it in front of you. You're going to have it in your order list so that you can have it, you can check your orders all the time and know what positions you have on. It's actually a good trade. If I had positions open, I would put on this trade today for sure. This is another good day to put on this type of trade. Yeah, I didn't press send. I did it actually on my phone, but it's in here, and I'll show you here. Here's my group, and here's a 7DTE trade down here, and you can see that it filled right here. My order was a 45.85, 45.75 put spread. It's about 150 points away from the market. Awesome trade. Okay, so let's talk about rolling a threatened trade that's breached. Okay, and sometimes this happens when you have like an overnight condition, right? The market really dropped. I'm going to simulate a breached trade. So we've got 47.30, 47.20. So right now, this trade is breached halfway. It's breached halfway. Let's take this down to 47.20. 47.30. So now this trade is breached. So what I would normally do here, in this case, the price is pretty good because it's around 30 cents. What I do normally, I would take it down like at least 20 points. Let's take it down to 4,700, 47.10. And you can see here, in order to roll this trade, it would cost you $1 to roll it. And in some occasions where you think the market is just going down and going down, you know, and you want to recover this thing, you would put in a debit to stop the bleeding. In a market condition like this, and this is why it's really good to have a good understanding of the market and expected moves, and like what I was talking about during either the last session or the one before, where we've had markets that just go down 5%, 6%, knowing there's a high probability that this is going to reoccur. And traders live on probabilities. So what I would do is I would actually move this up, take it back to 47.30, 47.20, the same strikes. And now that there's a 30 cent debit, well, what I've done is I said, okay, with this market trending higher, I'm actually going to move this up, this position, the strikes up instead of down, and actually take a credit on it. And I'm pushing it out actually from 18 January to 21 January. You can even push it out further. You can push this out to, let's say, 24 January to give you more time, and you're still getting a 10-cent credit on it. And what I call this is the patience roll, because what you're doing is you're waiting for the market to recover. So instead of trying to push it down, what you're trying to do is you're giving it time for the market to recover. I've done this in the last 2 corrections that we've had, that I've moved a trade out without taking a huge hit on the trade. And basically just having some patience to let the market do what it's going to do and let it recover for you. And it's actually worked out very, very well on several occasions. Even if the market still goes against you, you can still push that out and not take a huge hit on that position. The only downside to that is that you are gobbling up margin that you can't use on other trades. But it's worked out. You just have some patience. You may not make the same amount of money that month because you have to wait, but it's a much better way than taking a huge hit on a loss and then coming out the other end anyway. I've had these trades go up a lot, and sometimes when I put a debit on it, I'll just move up the trade and take another credit on it if we have enough expiration time. If the market keeps going down, what you have on your side is time. Now, I'm not talking about a 20% correction like what we had with the pandemic, because those happen every so many years. Even with that 20% correction, you can push that out and let the market recover. And I've done that with large positions on monthlies because they're further away from the market, and just push them out 2 or 3 months and let the market recover. And again, you have to have enough margin to be able to do that, because you may tie it up. And that's why I give you the guideline of not using more than 50% of your capital when you're trading these things. And that's one of the reasons. Number one is drawdowns, and number two is you might have to roll trades out that take up your margin. And I've done this several times, guys, and it's worked out phenomenally well. So we entered the second, and we talked about rolling a threatened trade after it's breached. This is just one strategy that you can use to do that. Let's talk about rolling in an ideal roll. So right now the market's at 47.27, and so let's say we have positions at 46.80. So I'm going to go down to 46.70 and 46.80. That's where the market is right now. This is 18 January. What I usually do when I roll these is I go out 7 days. 7 days is kind of the sweet spot. 18 January, I'm going to roll it out to, let's do 26. So I'm going to roll it out to the 26. And what I usually do when I roll these, it's threatened, but it's not really threatened. But you want to roll these at 40 to 50 points away, especially with the volatility where it's at. So you want to roll these once it gets to a 40 to 50 point range. That's really ideal. When a trade is threatened, the market has already gone down. And sometimes all you need is just a few points to be able to get that thing out of harm's way. So I'm going to roll this down to 46.60, 46.50. That's where I'm going to roll it down to. Let's just take a look at the credit at that time. You're seeing a credit, and I usually put it in this range, and you can even drop it a little bit more. The market's moving up a little bit. So you're still rolling this out, and you're rolling it down 20 points, and you're giving it another 8 days to recover. And so right here, right now, it's showing a 10 to 20 credit. So let's drop this a little bit more if you want to be more conservative. I'm going to put out a video in the next few days where I shared all my trades November through December, where we had 2 5% corrections. It's really, really good video for you to walk through and really understand what's going on. Okay, so I'm going to drop this down to 45. I'm going to drop it down because I always like to get as much as I can, so I only pay 0 to roll it, to get it as far away as possible. Okay, so right here, I moved it down 5 points, and you can see here it's around 0 or 5, and this is what I would normally take. So I rolled it down 25 points, and basically you're rolling it for no cost. So we talked about rolling threatened trades, exiting a trade. We talked about that, when to exit, entering second. Okay, we caught all that. Okay, great. So let's go to conclusions and key takeaways. So anybody want to respond on that? Okay, when do you use extensions versus retracements? Oh, retracements are for just understanding where the market will go. Extensions are for really setting targets for your trading. How do I detail the P&L accounting for these rolls? So that's a good question, John. Okay. So what I do is when I roll a trade, and let's say I roll it for a credit, let's say that I collected initially 70 cents, right? And I roll that trade for a 10-cent credit, then my position is going to be, instead of 70 cents premium, I take it up to 80 cents. Now, if I do a debit, I just subtract the amount was for the debit, and that's how I keep a running total of these trades. This is how the brokers do it too, and I have it automated, in the group that I run, that does this. I mean, I have to manually show the positions, but it's constantly calculating where our running total is based on that criteria. Because when you put on a trade, you're actually receiving a credit. Now you have margin, right, on there, but you're actually receiving the credit. Your account goes up by that amount. I don't use stop losses especially not on monthlies or 7DTE. I roll those trades. $382 is a good area to put on a new trade, right? Because the market has managed to go up in momentum, and you wanna be following those momentums, right? Okay, all right. So Any key takeaways from some of you, that something that you've learned? I want to put that in the notes here. What I want to do is I want to just listen from you guys what the key takeaways that you have from these sessions. Anybody want to take a stab at that? So key takeaways, knowing, okay, what else? Which delta? Awesome. Oh, managing, awesome. Okay, managing breached position to prevent loss. Okay, awesome. Know when to roll them. And when to quit. All right. Knowing how much capital to use. Excellent. Okay. That's a good one. Do not place trade on FOMC day. Very good. When's your next service? All right, let's do that. Okay, these are great takeaways, guys. I really appreciate that. Okay, so let's move on here. So let's start this again. I'm gonna go through here. Okay. All right. And okay, so we covered this. I think we covered all this. We did. I love it. All right. Now, I'm going to take you through a little pitch, okay? And I don't want to be here and thinking that I want to sell you something. My goal here was really to help you guys, honestly, okay? However, we do have a trade alert service, and and I'm sharing this because it has made a huge difference in many people's lives. So we have a group now that's over 300. They trade all these positions, and many more in this here. And the way to get there, guys, okay, is what I talked about already. Trading small, trading often, having an understanding of your platform. What it takes is it does take discipline, but once you get the habits down, this is consistent, guys. This is consistent trading. It works. Having an edge and a no-quit attitude, okay? All these things are really important. And all of this leads to success. I'm going to share a link. It's about the SOS trade alerts. And I'm not going to sit here and try to sell you on this thing because it honestly sells itself, all right? And let me just take you down to a few slides here. I don't want to go through this whole thing, but there are success stories, right? And I'm gonna leave you with the slide deck so that you can read it. And these are real people that have been with us. And Glenn is with us already, and he's done a lot more than 22,000 on his account. He's one of our bigger traders. And I told him, when he freaks out, when the market goes down, I said, man, you're trading too big, but I do provide a guarantee on this thing, and I've never had to go good on it, just because it works, guys. These are good trading, and these are the costs if you join the waiting list, and I'm gonna put that up for you guys, all right? And you'll get the link. Right now we're not open, but we open on the 18th, and we keep it closed for a reason. We keep it closed because we completely and totally focus on our traders during the time that we are closed. And when we do open, all the questions come in at one time, so everyone can take advantage of that. And for a couple of weeks, we keep it open, and then we close it again. And then we focus on our traders, making money. All the positions that I share are my trades. They come from my account. And it works so well because I am in it with you guys. I'm in it. I'm in these trades. And then I get a lot of questions also, in the end here to help you guys out for other trades that you may have put on, and you guys do it. And it's good because you need to learn. And it's not just a flat out trade alert service. It's a really education program that we have. And you're going to learn. You're going to learn how to trade these. And I'm in here every single day, and I answer everybody's question. We trade futures as well. The numbers are higher than this already. And I'm not going to go through this pitch here. It's $20 off. You get $20 off of it. People love it. So if it's for you, go for it. If it's not, then you can still ask me questions. You can still email me, you know, and I try to answer all the emails that I get to help you guys out, because I've been in the bad side of this thing, right? The really bad side. And I don't want to see anyone go through that, honestly. I've lost hundreds of thousands of dollars trying to get to where I'm at, you know, and it's because I just don't quit, you know, when I want to do something. And so, and this program has really helped me out as well, because I'm accountable. I'm extremely accountable to the traders that are with us. And I don't want to let anyone down, honestly. 99% of the time I stick to my guns. There's every so often that I get a little derailed, you know, but I always come back and recover. But this is it, guys. It is really a low cost way to earn while you learn. And a lot of people just stay with us for 3 months, you know, and then they learned it. They go on their own, and I'm so happy for them, you know, and I have great success stories from hearing those guys. All right. So we try to put on a premier service that's just very, very different from anyone out there, and very proud of that. And I think that people have achieved great things because of that, you know, because of our transparency and the fact that we're here in it to help you guys. So with that, that concludes the 3-day session. You know, we'll have more of these. We do have an education portal as well. All this information is going to be going in there. And I hope you really enjoyed and got a lot out of these sessions. And again, we learn in different ways. Hopefully I've helped you become a better trader. We will definitely see you again, I'm sure. All right, guys, thank you very much. And if you have any questions about the service or anything, you can email me and I'll answer any of your questions. All the information is out there. And if you have any any other questions, just let me know and we'll be there. And if you're seeing this on YouTube, make sure you hit the like button and subscribe, because we'll be putting out a lot of stuff. We're really focused on YouTube now. All right, guys, thanks and have a great, great day. And hopefully this was of great value to you. Appreciate it.